Private credit. Boom, the hidden investment trend of 2025. What if I told you there's a massive shift happening in global finance right now? A quiet revolution that's creating millionaires, reshaping Wall Street, and changing how money flows around the world. But hardly anyone is talking about it. While the media is busy covering stocks, crypto, and real estate, the world's elite investors from Blackstone to Apollo Global Management are pouring billions into one explosive new opportunity: private credit. It's not flashy, it's not loud, but in 2025, it's quietly becoming one of the most powerful investment trends on the planet. And the craziest part, most retail investors don't even know it exists. So today we're going deep into the hidden world of private credit, what it is, why it's booming right now, and how it might just redefine the future of investing. Hey everyone, welcome back to the channel where we uncover the smartest, most innovative trends in finance and investing. If you're serious about understanding how money is shifting in 2025 and beyond, make sure to like, subscribe, and hit that bell icon because today's topic isn't just about profits, it's about power. Let's dive in. What exactly is private credit? So, what is private credit? In simple terms, it's when investors lend money directly to companies instead of going through traditional banks. Think of it like this. When a business needs funding, it has two main choices: borrow from a bank or issue bonds on the public market. But since the 2008 financial crisis, banks have faced tighter regulations, higher risk requirements, and less flexibility to lend to smaller or riskier companies. That's where private credit steps in. Private funds backed by institutional investors, pension funds, and wealthy individuals lend directly to businesses at higher interest rates, bypassing the banks entirely. In other words, it's Wall Street's version of peer-to-peer lending, but on a massive scale. And here's where it gets interesting. While traditional markets have been unpredictable, private credit has been quietly generating steady double-digit returns. That's why, in 2025, this market has ballooned to over $1.6 trillion globally, and it's just getting started. Why private credit is booming right now. Let's talk about why this sector is exploding in 2025. Three main forces are driving the boom. One, the rise of higher interest rates. After years of near zero rates, central banks around the world started hiking interest rates to combat inflation. That made borrowing from banks expensive and difficult for mid-sized companies. Enter private lenders, who are offering flexible terms at competitive rates, filling the gap left by traditional institutions. Two, banks are stepping back. Regulations like Basel III have forced banks to limit high-risk lending. That means fewer loans to small and medium businesses and a golden opportunity for private credit funds to step in. Three, investors want alternatives. With the stock market swinging like a roller coaster and real estate slowing down, investors are hunting for stability with yield. Private credit offers just that: predictable income, secured assets, and diversification away from public markets. It's like a financial safe haven one that quietly outperforms when the public markets stumble. How it actually works. Here's a quick look at how the process works behind the scenes. A company, maybe a fast-growing startup or a mid-sized manufacturer, needs a $50 million loan for expansion. Instead of going to a bank, it approaches a private credit fund. The fund evaluates risk, negotiates interest rates, often 8 to 12%, and lends the money directly. In return, investors in that fund receive a share of those interest payments, sometimes monthly, sometimes quarterly. These loans are often secured by company assets, which lowers default risk. And because they're negotiated privately, both sides enjoy customized terms and faster approvals than banks could ever offer. In a world where speed and flexibility matter, private credit has become the go-to funding solution for modern businesses. Who's making the big moves? The big players see the potential, and they're going all in. Blackstone now manages over $290 billion in private credit assets. Apollo Global and KKR have both expanded their private lending divisions massively. Even traditional asset managers like Fidelity and Goldman Sachs are creating new funds to capture this growing demand. But it's not just the giants. Smaller boutique firms and fintech platforms are entering the scene, offering fractional access to private credit for everyday investors. In other words, what used to be an elite club of institutional wealth is slowly becoming democratized. Platforms are emerging that allow investors to commit as little as $1,000 to $5,000, effectively letting individuals tap into returns that were once reserved for billionaires. So, what do you think? Would you invest in private credit if you had the chance? Or does the lack of transparency make you cautious? Let me know your thoughts in the comments below. I read every single one. If you found this video insightful, make sure to like, subscribe, and turn on notifications so you don't miss our next deep dive into the future of money and investing. Thanks for watching.